if you didn't hear anything, there's a reason for that. Yesterday we did a clip and Andrew from Option Monster forgot to turn on the volume, so we thought we'd give him a little poke this morning with that. You know, the markets are quiet here, everybody. You know, they've gotten up to a high, and while the market goes up, the amount of movement on the upside is narrowing. You know, we're not going up like 8, 10, 15, 20 handles at a time. We're going up 2, 3, 4 handles at a time. And that goes back to exactly what we want to speak about in this clip today. So far in the month of March, there have been exactly 16 trading days. Out of the 16, 14 have been up and 2 have been down. Of the 2 that were down, one day closed down 1 handle and the other last Friday closed down 5 handles. So, you know what, no matter what anybody says, you can like them or dislike them, but the markets just are not moving down. As we go into the latter parts of the month, the big concern is that the market, it's not that we're going to correct and maybe sell off a little bit, it's that maybe the markets are about to explode onto the upside. And the levels that we've been talking about over the last couple months may come into play, the 1183 and the 1201 level. You know, it's not just a month end, it's a quarter end, and it's a big quarter end for a lot of these portfolios out there that strive to make money, you know, in the first part of the year and to maintain those profits. So, you know, the big thing here is the markets are going up on no volume, and we just don't really know when we're going to correct. You know, it could continue on like this for some time. As we go into the latter parts of the day today, you know what, we're in a volumeless, tradeless market right now, and we don't want to be, you know, it's back to what we said last week. They're up too high to sell, and they're up too high to buy and just too firm to sell. You know, the volumes here are really bad. We've got 6,000 big S&Ps, but yesterday's total volume in the pit was only 8,000 contracts. That's not a lot of volume, and it's hurting these guys, the locals in the pit, that depend on the open outcry system to make money. Yeah, they buy and sell the minis against the bigs, but you know what? If they can get an edge on a big 50 or 100 lot in the bigs, that's where all the money's made for these guys. You know, they're just like anybody. They're trading the markets and they're thin, and you know, the profits are smaller. Listen, we're gonna cut it short. Over in the 10-year note options, volumes have dropped very significantly over there. In the open outcry markets over the last couple of months, they were doing 50, 60,000 a day, no problem. That's dropped down into the 20 to 30 range. Over in the Eurodollars options, where they do about 300,000 plus a day, that's down to about 150,000. So it's not just in the stock market that we're seeing a shrink down in volume. It's really all over the place. We'll be back tomorrow with another update, but as far as things are going on here, it's quiet. We think it's going to stay that way.